BYOB worldwide. I'm excited for each and every last one of you all. Houston as well. So now, ladies and gentlemen, as I stated, as you continue to log on, drop it in a chat. Now, let's talk about this because tonight I'm excited for you all. Tonight, I'm really just excited for what we're going to be discussing. I'm excited for you all definitely elevating to the next dimension. Good evening, Cleveland. So, just excited for all of you all. So, now, Jacksonville, good evening. So hopefully, good evening, Clea. Look at you guys still logging in. Good evening, good evening. So hopefully, where we've been, hopefully, what you all have been doing at these last two Thursday evenings have been very, very instrumental in shifting the narrative for you all. And so this is, we started out, we closed out last year, right? Let's take it back just a little bit because we wanted to be intentional in this year. We wanted to be very, very intentional. And so that means that you have to have the right mindset. And so that's why we start things out, the way that we do. And that's why I'm asking you all to drop those affirmations in there. We're talking to you all about the way that you think and everything else. And there were some interesting events that actually transpired today. So I'm gonna get into that. But good evening, Jacksonville. But I want to make sure that you all are operating with the right mindset. And I'm about to tell you exactly why that's so important. Now, where do we begin? There's a foundation to what we discuss, and there's a foundation to, their mindset. There's a foundation to that. And that begins with you and your belief. I am a BYOB master trader. I am the signal. All my trades in profit, I am 777. Okay. That's where we need to, that's that foundation. And let me help you understand something. I really want to really just break this down. And today is because, yes, I'm quite sure you all saw the news. It's been trending. It's everywhere, right? What happened with Robinhood? Okay, what happened? And it was, and so many people have a misconception. And this is where I need you all to get to. Good evening, London and Jonesboro. Good evening to all of you all still logging on. So this is where I want you to get to. You are here to build real wealth and freedom. And I want you to understand just how significant and important this skill set is that you're learning. I want you to understand the significance of the skill set that you made a destiny decision that you are here for. And money flows to us, not just through us. And this is where we're making that shift, right? This is where, because I get excited and I had a few conversations today. I really had a few conversations today. And those conversations, and this is what I really want to point out to each and every last one of you all, kind of think about when you go to your job. And this is the mindset, right? When you first get on a job and you start working and you get a paycheck. Now, how many of you all get excited every time you get paid? Or is there an expectancy to you getting paid? Am I excited like I'm in shock that I got paid? Or is there an expectancy to me getting paid? Which one is it? Drop it in the chat. Which one is it? I put in the work and there's an expectancy that a paycheck comes along with that, right? It's an expectancy. This is why we say all my trades in profit. There has to be an expectancy for profit. There has to be an expectancy for wealth. I want you all to get to that point where you're not in shock or you're not surprised, right? There's an expectancy. We're not excited. I'm expected. It's expected. So you are a master trader. You are a BYOB master trader. You are the signal, and that's why we teach the way that we do. Be Your Own Bank is about educating, impact, and empowering. Okay, this is what this is definitely what we're definitely here to help you understand. And there is so much. There's an expectancy, and there is so much that. So when you say all my trades in profit, that's that expectancy that you all need to have. That's that expectancy. And so that's where I need you all at. And so when you think about, right, when you think about what happened today, what transpired, so many people went to hedge fund investors and so many people went to so many different things. But understand that Robinhood is a brokerage. And so there is an SEC requirement. There are SEC obligations that must be held. There are SEC obligations. And so that had nothing to do with what we're doing. This is why this skill set is so important. And it's so important for you to understand that you are in control. It's so important for you to understand that you don't ever want to leave your livelihood to someone else. You just don't. Once again, that's that blind trust and that blind faith that we tend to talk about when I talk about, me being a financial advisor, me sitting down and that's that blind trust. So what's different? Because you cut out the middleman, you still have that blind trust to where many individuals did not even understand that that's not Wall Street. That's not hedge fund invest. That's not any of that. They're still in profit and navigating the markets. It's because that particular brokerage has to meet those SEC obligations. They have to have so much on hand. That's what actually transpired. That's why people couldn't make quote unquote investments. So, but see, the difference is with this skill set, because what they were purchasing, it caused the price of those stocks to rise. And so what it did is it limited what they actually had. And so you in this skill set, you having this skill set, it doesn't matter what the market does. And I'm gonna start sharing my screen as I have this conversation with you, but it really doesn't matter what the market does. You're in a position to take profit. You're in a position to where you control the narrative and you are in control of your destiny. That's what's actually happened with you all. So today, for you as a trader, for you as someone learning this skill set, for you, you should be so excited, right? You should be so excited, right? You should be so very excited over what's transpiring, right? You should, just elated, you know, because of the skill set that you are learning and the knowledge base that you have. Because this is why this is so important, that we all have this information. Exactly. We're blessed, perfect positioning. And so nothing should ever shake you. Nothing should ever move you, because you're empowered and you control your livelihood and you control your own destiny. And so just really, let's, diving in here, diving in here, as we look at this, I really want you to understand, really want you to understand the magnitude and the power of the tools and the resources that we have available to us. I really want you to understand that this evening. And of course, as promised, we're going to dive into, we're going to dive into, everything that we're looking at, and we're going to dive into, those questions and everything that, we've definitely been empowered. So as we get ready to do that though, as we get ready to dive in, one of the things, if this is your first time here on the call with us this evening, let me get a 111. See, I didn't forget to know who's on here. And if you are still learning how to cash out, let me get a 222. So welcome, and welcome back. Welcome, and welcome back. I love it. So welcome, and welcome back. Now, all right, so let's take a look. So let's go ahead and dive in here this evening. So now, where do we begin? We begin at the basis of the understanding and the basis of the skill set. We begin at the basis of the power of this. Now, I want you to understand something, because of what I would just explain to you about deposits, how much money you have to have on hand, all of those things, your banks must have that as well. Okay, banks, any financial institution, they're regulated, and they all operate under that same umbrella of regulations. And this is why the skill set is so important. But one thing I also want to make sure that I'm highlighting here as well is that we're empowered with tools and resources. We're empowered with resources readily available to us. And this is the premier tool in IM Mastery Academy. This is that premier tool. And we're going to dive into this tool this evening. You know, we're going to dive into some things to really help you understand how to execute the trades. But this is Be Your Own Bank too. So one thing I want to highlight to you all, let me welcome all of you all once again that are new here with us this evening. But one thing I definitely want to highlight with you all is our visionary, Mr. Gerald D. Rogers, the visionary of this movement. He is actually the spokesperson for this tool. So I'm just going to play this clip really quickly. So because I want you to understand the power of what you have in your hands. And think about it. If banks use tools, if banks use resources, you see, they were not impacted by what transpired today. Not at all. But that's why you shouldn't have been either. You shouldn't have been moved. We're not anti-bank. We're just pro your household. So we're not anti-wealth because we're pro-wealth. We want the wealth to come to us too. So let me go ahead and just play this really quickly, and we'll get started here this evening.
Wow, folks, I'm just absolutely amazed to know that I'm a part of an organization looking to empower and impact lives across the globe. I've been in this space for over 20 years, commercial banking, lending, and when I look at the web analyzer in comparison to what the big banks of the world utilize, that web analyzer is equivalent, far exceeds the expectation that I was anticipating after having that experience on the investment market. So folks, for those of you who don't understand the magnitude of what you have your hands on, I encourage you, I challenge you to take a deeper dive and realize that literally you have in your own hands the power to become your own bank and allow us to be a partner to empower you economically, financially, and leave a true legacy.
Wow, wow, wow. So you heard it. I mean, it's all right here. You have the power to become your own bank, the power to leave a true legacy. So understand that everything that you desire to do, everything we're looking to accomplish, everything that we're looking to achieve, it is going to be on the inside of you. It is truly an inside out job. That is what this is. It's an inside out job. So what you're desiring to achieve, it's all right there on the inside of you. And you have the power. I cannot tell you, you are connected with the best of the best. So what I want to do as we dive in here this evening is I definitely want to, especially with the events that transpired today, it's just, you are in the right spot. I just cannot stress it enough. So I'm gonna go ahead and Mr. Rogers, anything you would like to add right now before we dive into this training here this evening?
Yeah, ladies and gentlemen, I want you to be very excited about understanding the importance of having the education. And as Ms. Dyer has already stated, so many individuals today are just completely without the information that you have, and people are panicking, not realizing that Robinhood is a retail brokerage, which that's what happened, and they did not have the liquidity necessary to cover all of the accounts that they were having. And so many people were under the impression that it's something that Wall Street did. No, that's not what happened. And what are we saying tonight to you? An educated trader is a profitable trader. So this is very important for all of your friend, neighbors, and relatives that you have. This is why they have to understand this information from the inside. So people, you have the ability to purchase through whatever brokerage you use. But if you don't have the skill set, understanding the movement of the market, the market structure, understanding what we're going to talk about tonight, technical analysis, then you have your fundamental analysis, then you have your sentiment, because what has transpired, people are just still blindly trading. So this is why this movement is so important, because it is the education. And many of you, because you have the understanding, the market, there was no impact, and you were able to take advantage of the rise of GameStop or whatever, if just because you understood it. And then you're now positioned to take advantage of the ride up or down, because remember, the retail, we're considered to be retail investors, right? That's what you and I are. So we don't move the market. We just simply ride the wave of the market. So I really want you to pay close attention this evening, because what Ms. Dyer is going to be able to demonstrate. So, and this is why you should be screaming from the rooftop and helping people understand the distinct difference between trading and investing. The distinct difference between trading and investing, because guess what? those individuals who don't understand and who have an accounts with Robinhood, all they simply said is we can no longer take buy positions. Now we'll still allow you to take sell positions, but where the market is, it may not fall. But that's the benefit. And folks, I'm telling you tonight, your friend, neighbors, and relatives, you got to expose them to this information. I had the privilege today of my dear brother. I had the opportunity to visit his retail location here in Jacksonville, Florida. And unbeknownst to me, I was standing there, and next to the ATM machine, there was a Bitcoin machine that he has in this store. And folks, so it is happening, it's real. So now we're going to give you the proper understanding to be able to do that. And it's happening. So you need to really take this skill set serious. And this is, as we've already decreed and declared, that this is the year of transformation. So we're going to transform your mind so that you can now become profitable no matter what the market is doing. And you're going to be able to silence the noise, because we don't trade by emotion. We understand that an educated trader is a profitable trader. So back to you, Ms. Dyer.
Wow, there it is. There you have it. Right, we probably could end the call right now, right? So no, I'm just kidding. But it's just so important that you understand the magnitude. And this is why, when you join us on those morning calls, this is why these calls are set up the way that they are. They're set up to, in the evenings, how we're going to dive in here this evening, how we navigate, how we educate, how we share with you exactly what to do. And then in the mornings, you are empowered to take the trades by yourself with us, of course, where we're navigating you through the markets. And that's actually what we're doing. And definitely why this is so important. So now let's just take a look at this, okay? This is GameStop. This is one of those stocks that obviously it was in the news. Now look at what happened to the value of this, okay? So the beauty is as long as you have a broker where you can trade it, no matter what happened, you still can profit on it. So just like what just happened, you think about this for just a moment, that this is at that buy position. This is where it peaked. Now look at where it was, and then you can understand why that decision was made, because of the amount of liquidity that they must have. Look at this. We're talking about almost $480 a share. Now, once that news hit, where they stopped taking trades, this obviously is a few hours back because it was rising. Now look at this sharp drop that it had. I mean, just take a look. And so look at the fact of what happened over the last couple of days. Let me just put this on a daily chart. Let's really put this in perspective. So a few days ago, like this is January. A few days ago, it was at $5, not even $6 a share. So do you see where we are right here? And so then, of course, it goes up a little bit to where it's at $35. And then you go from $35 to almost $400. So you just, really, and it spikes up to 480. So just really think about that's what happened. The fact that the movement in this stock moved up so quickly that the liquidity was not there to cover it. And this is why it's so important what we do. Okay, this is why it's so important, because I can go back and you can see look how long this has been on the market. Look at how long this has been there. So we way back in 2019, right? So look at how far this has been. But it becomes, viral. It became viral. That's what happened. It's been in the market since 2002. Now look at this spike. What happened is those apps allow people to get in and buy those stocks, and everything is supply and demand. Every single thing is supply and demand. And this is the magnitude of the understanding I want you to be able to understand this evening. This is the monthly chart. So this is January. So every other month, this has not reached above $20, barely. It's been around $20 a share at the most. So it has not gone above that. Supply and demand. So somebody said buy GameStop. Just think about it. You tell somebody something, it goes viral. It went viral and it spiked up. So this is not Wall Street. This is still available. We can take the trades. That's not what it is. That company did not have the liquidity to be able to meet the the FINRA, the SEC obligations. That's what happened. So they had to stop you from buying, because yes, it did push the share of stocks up. Now, Some of the feedback you get, of course, is from oh, well, the wealthy, they can still purchase it. Well, hedge fund investors are under a different set of rules because of because of the obligations. We're not getting into that tonight. That's not what this call is about. It's about you understanding the power and the magnitude of what you have in your hands. Because at this drop, what that means is that this drop back down, you know, it spiked back down to $113 a share. Of course, you can sell it. So as people sold it, down the value comes up to about $215 is where we closed at today. So $215 a share. When earlier this month, it was barely worth $20. So now understand the magnitude and the power of what you have in your hands being a trader. Understand the power and the magnitude of what you have in your hands being able to navigate the markets the way that you do. This is actually what you're able to do. So no matter what the market does, whether it's rising, whether it's falling, you know, you're actually able to be in profit. So if you're a broker, you get on your particular broker and you can trade, quote unquote, trade GameStop. Now you're in profit. Now you're able to profit it, and you're able to take advantage of this movement that we're talking about. And then also one of the other ones that's in the news, okay? Let's just take a look at it. All right, so this is the other one as well. Now I want you to take a look at this, okay? I definitely want you to see what transpired. Isn't this the same thing? So $5 a share at the most, and now is, you know, look at how this spiked up. So when you think about the magnitude of people that's actually, you know, that's actually taking advantage of this, and the magnitude of people, this is why these things happen. This is why. So what caused the move? Well, simple, supply and demand. That's what caused the move. And so that's why, in order, because they have to have so much on hand, so they can't allow you to keep buying it and raising the price, because that's ultimately what happens. So yes, so many people buying it is going to bring value to that stock. That's going to bring value to that. And of course, it's going to go up. But if your brokerage does not have the liquidity to cover that, because they cash out, your money has to be there. Let's go back to the crash. Let's go back to, you know, the crash way back before we were even born or considered. You know, just think way back then. And so that's what happened, is money was not at the banks when people needed to make those withdrawals. So money, if they have to have money by laws that are put in place because of that, they have to have money on hand. If somebody wants to make a withdrawal, you have to have it there. So, you know, without getting into all the details and everything else. So, you know, this is about, so now you are actually able to take profit. That's what this is all about. You're actually able to ride the wave. No, this call is not about let's go analyze all the different stocks and investments. Is what we're sharing with you right now is to help you understand the power and the magnitude of who you are as a trader, who you are learning this skill set. So no matter what it is, I don't care what it is, whether that's that doggy coin or all of the other stuff that's coming out right now, this is about you understanding the magnitude of, you know, people lost money with this investment today, but you didn't because you can ride the wave. So hopefully that brings a little clarity to you. Hopefully, you know, well, I know it should bring a lot of clarity, not hopefully, because you should have a lot of clarity right now on the magnitude of, go ahead, Mr. Rogers.
Yeah, I just want to add one thing. Can you, before you dive into it, just for a point of emphasis, because I want people to really understand and appreciate the distinct difference between investing and trading. Now, for those who had invested into that, you know, they lost money, but just to demonstrate the revenue that could have been generated from the move up and down from a trading perspective, can you kind of just, based on a 0.02 lot size, what that profit would have been today for somebody who would have been in a trade?
Now that's a almost a $290 drop. So even at a minimum, right? At a minimum, what am I doing? At a minimum, you know, at a minimum, you're looking at about a $290 drop. So at a minimum, you had an opportunity to make $290. That's, so we don't care if the market's buying or selling. So we don't care if the market is buying or selling. All you do is ride the wave. write it out
And
in
that
profit. And so
means no
we're
one
actually
had to
about to,
actually, no one had to purchase that. They could have just made money off of the movement just because.
absolutely.
And okay, I just want to make sure particularly I guess you really understand the power behind this tool. So I'm going to silence myself so Ms. Dyer can do what she normally does in our BYOB Market Talks. Appreciate you so much.
Awesome. So no, and I mean it's just that, but it does the same thing. I mean, look at this, which we're about to go over. Blue line cross over the red and the downward momentum around that 80. Red candle with a flat top, PCR flip to the top. Even with that drop, even with the, what do we talk about? The fundamentals all the time. Even with that, it still follows the BYOB cash out strategy. That's why this strategy is so accurate. You know, this is price action with a twist. So that's why this is so accurate. So even if I check my time frame confluence is there. Look right here on the hour. And if I drop down to the 5 minute, it's all right here. So it does not matter. I want you to understand something about strategies, okay? Yes, this is a strategy, but let me help you understand something about the market. The market is price action, but price action is still only 60-70% accurate, okay? And so what you don't want to do is get where you are at analysis paralysis, because you can begin analyzing, doing all sorts of indicators, putting all sorts of things on the chart. But what the BYOB cash out strategy does is price action with a twist, and it actually houses all of the areas of value that we're looking for to be utilized. So when we utilize this strategy here, I actually have my moving average, I have my price, you know, I have down here, I have my trend that's in here, and I also have my PSAR, which is a trailing support and resistance line. The areas of course, support and resistance, trends, things we talk about all the time, right? And then of course, you know, where are we at in the market with these moving averages? And that's ultimately what this is. And this is why the accuracy is there at a 92% accuracy rate. And so as you're seeing right here, and this is a stop. This is a stop. So I don't care what you want to trade. This is a stop. And so it meets all the criteria that we're looking for with the strategy. So I can teach you the strategy, you know, the academy is going to go deeper into price action. But price action is just basically how you analyze the market. It's what we talk about all the time. It's literally what we talk about all the time from analyzing the charts. Is you know, looking left, support and resistance lines, the trends, market structure. That's simply what price action is. So and you can do it naked where you don't have anything, and then you begin to just add on top of it. So what we do, and what I have right here is these three indicators, and that, but the indicators are based on, you know, what you're looking for successful price action. And that's why we're back tested at a 92% accuracy rate. And so as I look here, see, we're going to train on GameStop tonight. So we're going to train on GameStop. We're going to go over the strategy. You see, we're on a 15-minute chart right here. We're on a 15-minute chart. And then, of course, I have my stochastic, that blue line cross over the red, and the downward momentum. And you see that's going to happen around that 80, okay? That happens around that 80. And then, of course, I'm looking for that red candle with a flat top, not a wick, with a flat top, and that PSAR that flips to the top. So even with that blue line cross over the red candle with a flat top and a PSAR flip to the top. Then of course, I want to check my hour. When I check my hour, I have confluence. And then of course, when I drop down to my 5 minute, you know, it's right here. So I'm still selling. So guess what? Support and resistance lines in the market. Let's find that support and resistance line. Where is that support and resistance line? Obviously, it's right here. So we'll talk about want to talk about that so you can see where that was created, that support and resistance line that's right up in there. And you can trade down to here as well. It works the exact same. So I have GBP USD set up, but GameStop is where it's at. I'm going to go back to GBP USD. So definitely going to go back. And so you say you love it, options and analysts, absolutely. So let's go over here and let's talk about this. And then you asked me to slow down. So for those of you all who are new to the call, yes, I will go over that one more time. And but for those of you all who are new to the call, just so I can help you understand exactly how these calls work. So on Tuesday is when we really break down, and on Tuesday is where, you know, we go over the strategy, and the entire hour is based on the strategy. You right? That's what this is. Okay. All right. So now let's go ahead and I'm gonna walk you through that. Now, the stochastic, okay, it's 3 indicators, just as I just did it on GameStop. I'm looking for 3 indicators, and what we're going to do is look at this buy. All right. We're going to look at this buy, and I'm going to stay here for a while. But so what I'm going to do, so you guys can understand what exactly I'm about to do, I'm about to walk you through the strategy itself. And then we're going to walk through this trade that, because this is a trade from this morning. So can I get a 777 in the chat if we took profit? A 777 in the chat if you cashed out on this GBP USD. There we go, because this is our trade from this morning. Awesome, awesome, awesome. All right. So let's, okay, am I still here? Okay. Zoom kicked me out for just a second, but it brought me back. That's the quickest it ever brought me back. So now we're going to look at this, and you can see that we're going to talk the strategy off the 15-minute chart. But what I want to do as well is with these with these alerts that happen over here, with these alerts, I want to walk you through understanding exactly how those alerts work. Okay, that's definitely something I want to do tonight. That's the intent. So I actually have 2 of them set up for you where we can definitely go in and look at those. So now, 3 indicators. Once again, I have my stochastic. My stochastic is my leading indicator, okay? My stochastic is my leading indicator. And then, of course, I have my Hikanashi candles, and I have my PSAR. Now, understanding that these 3 indicators, this is my leading, these 2 are lagging, which means that, okay, let me just go over here for just a moment. When I look at this chart, okay, when I look at this chart, what ultimately happens is, seeing this chart, is I see that when I do it as well, and that's why I'm pointing this out, is that we, by human nature, you're going to look at the candles first, okay? Human nature, that's where our eyes go. This is where perfect practice makes perfect, because I need you to look and see, what is my stochastic doing? So understanding that, yes, this did start around this 20 down here, and it started moving up. If my stochastic is curved down like this, I'm not looking for a buy right now. I'm not looking for a buy. We experienced that this morning. And I'm highlighting that because I want you to understand that you listen to what the market's telling you. You always do what the market says, not what you want it to believe. And I use the analogy, and I'll use it again. That we know that the market was buying or the market was selling. Just like if, kind of on that stove, right? The stove is hot. So the stove is hot. And, the stove is hot. So if the stove is hot and somebody tells you don't touch it, like the market says don't trade it right now, this is saying, you're like, well, you're at the 20, which means, oh, the stove is cut off. But yet you want to test the issue. You want to push the issue. You touch it and you get burned. So you touch it and you hit your stop loss. So that's not what we're here to do. All right. That's not what we're here for. What we're here to do is understand that we want to analyze it. We want to develop that relationship with the market, and we want to allow the market to really begin to speak to us. So that's what we're looking for. And so now, as you look at this, I have that blue line crossed over the red in that upward momentum. So as far as that question, as far as the stochastic, What I want you to understand is you have your stochastic fast and you have your stochastic slow. There are calculations that actually go into calculating this, but what I want you to think about it from the perspective of, you have many apps on your cell phone, I'm sure. You know, all of us do. We have multiple apps on the phone. We open them, we know how to use the app, like I'm explaining to you how to use the stochastic, but do you get down into the details of how the app works? And you know, do you get down to the nitty-gritty details of the intricate details of everything, of exactly how that app works and why is it done that way? If you start getting down that deep into it, you're operating in analysis paralysis, you know. And so it's okay if you just want to know, but you know, you start getting down into that analysis paralysis. You have what's called a stochastic fast and a stochastic slow. So this, you know, it tracks the market rate for the currency pairs. That's what this does. And so the blue line is the stochastic fast. The red line is the stochastic slow. And so that's why you're looking for the blue line to cross over the red in an upward or downward momentum. So that one is that leading one. So even right here, you can see where my stochastic, the blue line is leading. That's my stochastic fast. And so, but don't get too detailed. It's trying to figure out exactly how they operate and, you know, the mathematical calculations and everything that goes into that. So now, so once I understand that my blue line is crossing over, blue line cross over the red in an upward momentum, then what you're looking for is you have these Hikanashi candles. Now, these are actual trend candles, okay? These are trend candles. That's why they are an indicator. If I look at my candles, you see my candles are not smooth. You know, you have to understand how to interpret them and how to read them. And that's the basis of what's in the academy as well. But what, you know, Hikanashi candles are trend candles. So they take the guesswork out. Now, it's still important for you to understand candles. I'm not saying that it's not. It's really important. So you still want to know and you want to study them. But here, the Hikanashi candles, they're smoother. They're the trend candles, okay? And then the dot is the PSAR. That's the parabolic stop and reversal. So when this is on the bottom, the momentum of the market is the market is telling you where the stop loss is. The market is telling you where it's moving. So just imagine this force where it's pushing the market up. And here is, you know, is pushing the market down. So just kind of think about it from that perspective. So here you have your stochastic, that blue line cross over the red in an upward momentum. You have your green candle with a flat bottom, and you know, you have your PSAR flip, okay? So no, we're not doing calls and puts. We're getting there. I remember we're building up for that. So we're getting there. So now you have your blue line cross over the red, you have your green candle, you have your PSAR flip to the bottom. And so now this is the BYOB cash out strategy. So that's what that is. Now, here we go. Now, before we flip and do time frame confluence, it is your stop loss. Remember, this is that parabolic stop and reversal, right? Parabolic stop and reversal. And this is your stop loss is going to go below here or above there. So if I'm buying, my stop loss is below the PSAR. If I'm selling, my stop loss is above. But just to kind of go back to your question, when I say it's coming, the reason why we're breaking this down the way that we are for you to understand everything, you know, I'm being very systematic with the way that we're sharing this information with you and breaking this down. So what I'm teaching now, you do have to know for that as well. So just to bring some clarity, because that's a good question, but just that I'm not on that just as of yet. But this information you do need to know for that. That's why we're doing this first. So now, when I come to my hour, all right, let's check our time frame confluence. So when I come to my hour, it needs to look like it's going into a buy, okay? I need it to look like it's going into a buy. So so you see that blue line cross over the red in an upward momentum. And then of course, you see that green candle, right? So I do have that green candle and I have a PSAR flip. That means it looks like it's setting up if I was going to trade on the hour. That exactly, you know, this is what that means. So you understand that I can definitely go into that buy. All right, I can look at that buy. So what we're doing here is we're trading off the 15. So this is where I really want you to make that understanding and bring some point of clarity. We're trading on the 15, okay? We're trading on the 15. When I come to my hour, what time frame confluence does for us is, and this is what we're focused on this evening, is understanding that the higher time frames move the market, my lower time frames are all the activity. So I need to jump up and check what the market is actually doing. What direction is the market actually going in, okay? What direction is that? And then when I drop down to my 5, that's where I see all of my momentum, and that's where I see all of my activity. Now, of course, I'm scrolling back because we are looking at, I'm scrolling back because we're looking at a previous trade. And so, of course, when you flip, you'll just be in this area, in this zone right here. You won't have to do the scrolling like I'm doing. And so I'm just, because we're looking at one that's already passed and manifested. So that's, why that's so important. Now, as I'm here, I'm here on this 15-minute chart. Let's go ahead and break this down, okay? Let's go ahead and break this down, because my take profit, right? My take profit is going to be at that first support. Like, of course, it's not this one because this is where a trade started, but it's going to be at that first support resistance line, or, right, it's going to be at that first support resistance line, or it's going to be 10 pips and cash out. Now, for those of you all who are just getting started, learning still learning support and resistance lines, your 10 pips and cash out, obviously, you would be down here somewhere with your 10 pips. But as you begin to understand your support and resistance line, you see that we're now up to 43. And so that's where that difference comes in as far as the amount that you can profit. Now, this is what I want to highlight for you all this evening. And because I'm looking at the time, I'm not going to rush this. So the same way, we started last week, but anytime some events happen, anytime something that happens that we need to discuss, or we need to bring clarity to you, we're going to take the time to do that. So all that means is that we're going to finish up, with the time we have remaining on this call. And then, of course, next week on Market Talks, we'll break this back down and we'll continue the training, right? And so now here, what I want you to understand is this was signaling all day, okay? We pulled this from multiple tools, right? This particular trade, we pulled from multiple tools. So not only was it triggering here with the vibrata, okay, this trigger with the vibrata, it also, if I would have to come way up here to where we were a lot earlier this morning. So time flies when we're having fun, absolutely. So, but this was definitely down in here where this was triggering earlier, but then at the same time, the harmonic scanner had it for a harmonic pattern. So not only did we get the triggers from the vibrata, our harmonic scanner also had this for a buy, all right? It also had it for a buy. And so what we did is we put it on here, and then of course we utilize the triggers. And so this was triggered off of the hour, okay? This was triggered off of the hour. Now, when I look here, this did not, let me take these off of here. You guys know we were analyzing that this morning. So when I look here, where I didn't get a flat top till I got right here on the hour for me to know that I can continue this trade and move forward. Now, did I check my 4 hour for my confluence? If I'm on the hour, I have to check the higher time frame to confirm where the market's going. And then, of course, I have to drop down to the 15 to make sure that it's still going in that buy. But what we're going to, I'm going to add to it next week about understanding that last significant low, that last significant, so we can actually understand and really help you understand, how do I know it's going to keep going, as opposed to how do I know it's just going to hit that first one and then turn around. Now, what I want to focus in a little bit though is on these entry points. So we know, right? We know that this was buying, and we've been following this one all week. So we've been following this actually we follow GBP USD all the time. So you can tell that this had been buying, this had been selling, this had been buying. And what we've been noticing for the last week and a half, as we've been pulling this up, these triggers are definitely coming through here on this GBP pair. And so as we're looking at this, you can see on this higher time frame that we were in this range area and we were buying. And last week we broke down the different types of market orders. So whether I'm doing a market execution, whether I'm doing a buy stop, the sell stop, or whether I'm doing a limit orders. Okay, so that is actually already uploaded on the YouTube channel, and you can go back and kind of get a refresher on those different types of market orders. So, but as I'm looking at this, this was definitely in a buy and this was in a sell. So this is where those triggers happen. And this is what I want to highlight for you all. You notice that as this is moving up, okay, you notice that as this is going up into that buy, and it does not matter what you're looking at. It does not matter what it is that you're seeing, because of the simple fact that when we were looking at GMC, that guess what? I mean, GME, GameStop, I'm like GMC, like I need a vitamin. So, but when we were looking at GameStop, what happened is, you know, they did the exact same thing. You know, we followed the exact same format, blue line cross over the red. I mean, everything is the same no matter what you're looking at. So as I'm looking here, you can see on the higher time frames. So even when I'm looking at my stochastic, right, my blue line cross over the red and an upward momentum. So even if I'm on these higher time frames, you can see it still follows that coordinate. You know, it's still going to follow all of that. And so as we got into this range area, you can see I don't see any of the moment. I don't see any of that. So let me show you. I'm just going to randomly pick one, and we're going to pick this 4-hour candle right here. So you see this particular 4-hour candle. This is what it covers. Now, this is what I want you to pay attention to. This is what I want you to see. That in that one 4-hour candle, that meant that that candle took 4 hours to manifest. That means that that candle lasted for 4 complete hours, right? And you can see that in those 4 hours, do I see any corrections? Do I see any pullbacks? Do I see anything? Okay. And I did see the question about scalping. I just wanted to answer it in here. Do I see anything? I don't see anything in here. I see nothing but one green candle in an upward trend, correct? Now, what I want to do is when I come down to the hour, now, of course, I cannot get this. You'll never have this where, because it's, you know, look at how it kind of overlaps into the others. So you're going to see technically more than 4 candles when we drop down to the hour. When we do this though, I doubt I can move. Can I move it in? Will it let me down here? Yay. Okay. So as we're looking at this, you can see, you know, these are those candles that are in this candle. Okay. These are those candles that are in this candle. What do you mean? What about the wick? I'm not, you talking about on the top, because it doesn't have a wick on the bottom. What I'm trying to do right now is I'm just trying to show you, you know, I'm trying to show you how these candles operate, not really about taking an actual trade at this particular moment. So, but when it wicks up, if I'm referring to when it wicks up, the candle, for example, let me make this bigger. Correct. I was going to get to that, but I'll go ahead and address it now since you asked a question. So the candle, right, in this candle, the price actually reached all the way up here. And it's going to appear as that pullback, what have you. What I don't want you all focused on when you're here is believing that I want you to show, you know, I want you to see exactly where that price is, because the price is going to be in a different spot. So as I drop down to the hour, right? As I drop down to the hour, what you see on the hour, you see all 4 of those candles, okay? You see 4 candles that are in a buy. Now, when I drop down to the 30-minute, you're starting to see more fluctuation. You're starting to see a difference in them. Now, when I come down to the 15, I want you to take a look. Did I see any red on the 4-hour? None. It looked like it just went straight up. This is when you're in a trade and you start spazzing out. This is when you're in a trade and you start panicking, because you're wondering, why am I experiencing this pullback? You're wondering, what is going on in my account? Why is this happening to me? You know, because this is why the understanding is so important and why we started this call out the way that we did. So many people do not have understanding but want to participate. So remember, we're here to build wealth. You're an educated trader is a profitable trader. You're here and you're making this decision because you want complete understanding and complete clarity of how your money works and why it's doing what it's doing. When you understand why it's doing what it's doing, your account balance and your trading account is going to go to a different level. And that's why I asked you the question I asked you at the beginning. Do you get excited when you get for those of you all still working, do you get excited when you get a paycheck? Or do you get it with expectancy? This is where I need you mentally trading. So you should not get excited anymore over a paycheck. Maybe when you were 16 and you got your first job or something, maybe when you didn't understand, when you got this new position or you got a raise, you might have been excited right then. But that's going to wear off because you go to work, you do what is required, you know your job like the back of your hands, when you're there for a certain amount of time, you have an expectancy of money. So when you get to an expectancy of profit and not excitement over profit, that's when your account is going to blow up. Okay? So this is how we operate and get to that expectancy because we know exactly what we're doing. So now right here, we noticed that we were in that 4-hour candle, right? We were in that 4-hour candle. We had absolutely no red, none. So now when I drop down to the 5-minute, right? When I drop down to the 5-minute, all right, now what do I see? What do I see is I see more, I see more red. And look where it's happening, okay? Look where it's happening around these support and resistance lines. So you notice that two questions that were asked. So do I mark my support and resistance lines? The dynamic, the ones that make the biggest difference are on the higher time frames, okay? The ones that make the biggest difference are on the higher time frames. The ones that are here on the lower time frames, if I start adding them in here, the reality is that those are not as strong. They're there. You want to recognize them, but they're not as strong. That's why if you think about it, have you ever gone to the harmonic scanner, pulled a trade, brought it back over here from the 15-minute and it didn't play out? Well, guess what? This could have been a harmonic pattern for a sale, but where did it really go to? So this could have been a harmonic pattern, a harmonic scanner trade on a 15-minute. They'll call all of these. They'll call everything, right? They'll just call everything. And then, of course, for the one who asked me about scalping, when you understand this, you'll know if you want to scalp or not. It just, when you focus on the big picture, then you'll be able to determine how you want to trade. You're going to be able to make that decision. And then, so as I look at this, you see, as I'm looking right here, this is where these triggers happen, okay? So even because I said I was gonna look at it from both directions, this is where these triggers happen. So when we get these vibrato triggers, I'm gonna get to you guys' question in just a minute. We really only have a few minutes left. And so I wanna get through this and then, we'll get to it. And as I said, we're definitely going to, we definitely have to break this down so where it'll flow over into next week as well. So you can see you have your corrections here, you have your corrections. So what you're doing is you have your impulse, correction, continuation, correction, continuation. You see a small one right up in here as well. So you definitely see a small one. Just asking about support and resistance, you notice there's another small one that's right up in there as well that we didn't see, that wasn't visible on a higher time frame. So they're relevant. I mean, look at where this came to. You can see, look right here. You see this one, we didn't get a candle that turned red, but you can definitely see the resistance of it attempting to push through this support and resistance line. Also, you can see where this one pulled back to, that support line, support resistance line, right? So now, and then it continued on. So just to really, really, really grasp in that understanding. So this is where these triggers happen. So you notice the vibrato literally does the heavy lifting for you. This is where these triggers happen. And so when these triggers happen, so like, for example, the trigger is going to come And like right here, when you get a trigger right here on this one in particular, you'll see it's in a sale, the trigger will say buy. And the feedback that you all say is, well, why is the vibrato calling it in a sale if it's in a buy? But if I'm looking right here and I go to my 30-minute, because I always need to know what's happening on my higher time frame, I go to my 30-minute, isn't that in a buy? Because you always need to check your confluence, because you'll see the correction in the activity on the lower time frame. But my confluence is actually what the market is actually doing. All right, that's what the market is actually doing. And of course, what I want to do is, of course, next week I want to add the pivots to it. But let me add this pivot, then I'll try to get some of these questions answered. So let me see. Let me show you guys something. And we'll elaborate, we'll go in a little bit more detail next week. So you saw me put the pivots on here, okay? Now, where'd they go? If I'm on a higher time frame, all right, on a higher time frame, you're very welcome. So on the higher time frame, here, I have my pivot point. And you see it'll go to R1. I'm gonna make it smaller because I'm trying to make a point. So your pivot point is that center point of the market. Understand that your pivot points are nothing more than support and resistance line. So understand that the pivot points is nothing more than support and resistance line. However, they're calculated on current market conditions, okay? So think about them as institutional levels, or some, you know, for example, just kind of think about them as some institutional levels. That's really what you want to think about it. That's really where, you know, your mind, you want your mindset to be. Now, you notice that on the higher time frames and the lower time frames, the pivots are in different areas. So you notice right here, it can go up to the R1, it can go to the S1. So if it goes, let's just look back for a moment. This is the pivot point, it went to the R1. This is the pivot point, it came down to the S1. This is the pivot point, it hit the R1. You see here on these higher time frames where how they, unless we have some extreme market conditions, that's typically, don't, I'm not saying guarantee, but that's typical. Now, when I come down to my lower time frames, it can fluctuate to that, as far as the S3 to the R3, but without those extreme market conditions. But that pivot point is still relevant. That's really going to help you understand where that market is and where it's going. So you notice that this is where our pivot point is at up here, and it pulled up to there. So that's going to help you as well. And like I said, we'll dig a little bit deeper. We'll definitely get deeper into this next week. So definitely dive a little bit deeper. But let me cover these up. You know, I definitely wanted to highlight that. So let me just real quickly. The support and resistance, you're going to have to understand some market structure to understand how to get into the trade and get out of the trade. And that's really, really, really what we're focused on right now. So, and time frame do I prefer? So just kind of really understand that it's not about what I prefer. I want you to focus on, you know, what we've gone over. Don't worry about my personal preference. Focus on learning the skill set, and then you create your personal trade plan, because how I trade might not be how you trade. You know, what you see and the way you like to take trades might not be how I do. So just think, some of you all like to scalp, some like to intraday. So always kind of focus on that as well. You know, always really kind of focus on that. So guys, tonight, because it's time to transition. So tonight,